Welcome back to XRP Update, the channel where we break down the biggest developments in crypto, XRP, blockchain technology, and the market forces shaping the future of digital assets. Today, we're talking about why the market may be completely missing what's happening right now with XRP. While traders focus on red candles, fear, and short-term price action, there are major developments unfolding beneath the surface that could end up being far more important than what the charts are showing today. The broader crypto market remains under pressure, and investors are feeling the pain across the board. Bitcoin has been sliding lower, Ethereum continues to struggle, and XRP has also seen significant downside pressure. On the surface, it looks ugly. Social media is full of fear, uncertainty, and frustration. But when markets become obsessed with price, they often miss the bigger picture. History has shown that some of the most important developments happen during periods when nobody is paying attention because everyone is focused on the latest sell-off. That's exactly why today's discussion matters. There are several major pieces moving into place right now, and they could have a huge impact on XRP's future long after this current market weakness fades away. One of the most overlooked developments involves the continued evolution of the XRP Ledger itself. While many investors spend every day watching price charts, developers continue building the infrastructure that powers the network. A new XRP Ledger software update is approaching, bringing improvements focused on security, performance, and long-term network stability. These types of updates rarely generate exciting headlines, but they are exactly the kind of developments that mature blockchain ecosystems need. Perhaps one of the most interesting aspects is the continued effort to separate the decentralized XRP Ledger from Ripple as a company. The software that has traditionally been known as Rippled is transitioning toward XRPLD, a change that further emphasizes the distinction between the technology and the company that helped develop it. For infrastructure operators, validators, and developers, this represents another step in the growth of the ecosystem. It may sound like a small technical adjustment, but it reflects a larger trend that many investors fail to appreciate. The XRP Ledger continues moving toward greater independence, stronger decentralization, and broader adoption. These are the foundations that support long-term growth, even when short-term market conditions remain difficult. At the same time, regulatory clarity continues moving closer to reality in the United States. This is arguably one of the most significant developments happening across the entire crypto industry. For years, uncertainty has been one of the biggest obstacles preventing institutional adoption. Companies, banks, and investors have wanted clear rules before making larger commitments to digital assets. Now lawmakers are actively working to finalize legislation that could provide exactly that. The discussion in Washington has changed dramatically. The debate is no longer whether crypto should be regulated. The debate is how crypto will be regulated. That distinction is incredibly important. It signals that digital assets are becoming a permanent part of the financial landscape, rather than an experiment that governments hope will disappear. As various legislative proposals move through committees and negotiations continue, the industry appears closer than ever to receiving a comprehensive framework. For XRP holders, regulatory clarity has always been a central theme because XRP's future has been so closely connected to legal and regulatory developments. Every step toward clearer rules potentially removes another layer of uncertainty that has weighed on the asset for years. Something else happening right now that deserves far more attention is the growing recognition of XRP's role within diversified crypto portfolios. As the digital asset market matures, investors are increasingly viewing crypto similarly to traditional investment sectors. Most investors do not own only one stock. They build diversified portfolios consisting of multiple assets that serve different purposes. The same logic is beginning to emerge in crypto. Bitcoin remains the dominant store of value asset. Ethereum focuses heavily on smart contracts and decentralized applications. XRP occupies a unique position between those worlds. It functions as a highly efficient payment asset while also offering advanced capabilities through the XRP Ledger. Features like decentralized exchange functionality, pathfinding technology, tokenization support, and other innovations create a unique value proposition that differs from both Bitcoin and Ethereum. This is why many analysts believe XRP naturally fits within a diversified crypto strategy. As institutional investors continue exploring digital assets, the likelihood of diversified crypto exposure increases. If that trend continues, XRP could become one of the assets that benefits from broader portfolio allocation strategies over the coming years. Now let's talk about what might be the biggest story the market is missing entirely. XRP continues seeing substantial amounts of supply leave exchanges. This is a trend that many long-term investors have been watching closely. When assets move off exchanges and into private wallets, it often suggests holders are preparing to hold rather than trade. Recent data has indicated that tens of millions of XRP have left exchange platforms. Under normal bullish conditions, many investors would expect such developments to support price appreciation. However, current market conditions are creating a different outcome. Broader selling pressure across crypto is overwhelming positive supply dynamics. This is where many investors become discouraged. They see favorable developments and expect immediate price reactions. But markets rarely operate that way. Sometimes positive fundamentals build quietly for months before eventually influencing price. If exchange balances continue declining while demand eventually returns during a future bull market, the supply dynamics could become much more meaningful. The key point is that the underlying setup may be improving even though current price action remains disappointing. Market psychology also plays a major role in what's happening right now. During periods of weakness, investors often focus exclusively on negative developments while ignoring positive trends. Fear creates tunnel vision. People begin questioning everything. They wonder whether adoption is slowing, whether interest is fading, and whether recovery will ever come. Yet when we look beneath the surface, many indicators suggest the opposite. Development activity continues. Regulatory progress continues. Institutional conversations continue. Infrastructure continues improving. These are not signs of an industry collapsing. They are signs of an industry maturing. The challenge is that maturation often happens more slowly than investors would prefer. Markets move in cycles, and patience becomes extremely difficult when prices are falling. But history repeatedly demonstrates that some of the strongest opportunities emerge when sentiment reaches its lowest levels. The investors who focus only on price frequently miss the developments that eventually drive future growth. That's why understanding the difference between short-term market behavior and long-term fundamentals is so important. Another factor impacting crypto markets today is the massive flow of capital into artificial intelligence investments. AI has become the hottest investment theme in the world, attracting enormous amounts of money from institutional and retail investors alike. When investors see exciting opportunities in one sector, they often move money out of other sectors to participate. This doesn't necessarily mean they have lost confidence in those other assets. It simply means capital is rotating. Right now, AI is absorbing tremendous amounts of investment capital. Major technology companies are raising billions of dollars. New AI ventures continue attracting record funding. Public market investors are chasing exposure wherever they can find it. Naturally, some of that money is coming from assets that investors sell in order to free up capital. Crypto is not immune to this process. In fact, many analysts believe part of the current weakness can be explained by capital rotation rather than deteriorating crypto fundamentals. If that's true, then the current environment may be less about crypto failing and more about investors temporarily chasing opportunities elsewhere. What makes this situation particularly interesting is that investment trends rarely remain dominant forever. Markets tend to move in cycles. There are periods when technology stocks outperform. There are periods when commodities outperform. There are periods when crypto becomes the center of investor attention. AI may be dominating headlines today, but future market conditions could easily shift focus back toward digital assets. Investors who maintain exposure to multiple growth sectors often position themselves to benefit regardless of which trend leads at any given time. This is why diversification remains such an important concept. Rather than treating AI and crypto as competitors, many investors view them as complementary opportunities. Both represent transformative technologies with significant long-term potential. The current rotation toward AI does not necessarily invalidate the long-term thesis for XRP, Bitcoin, Ethereum, or the broader crypto market. Instead, it may simply represent one chapter within a much larger investment cycle that continues evolving. Meanwhile, developments outside the XRP ecosystem also offer valuable insights into where blockchain technology is heading. Projects focused on interoperability, decentralized finance, data services, and AI integration continue gaining attention. Flare, for example, has been expanding its reach through additional exchange listings and broader accessibility. The project combines several major narratives currently attracting investor interest, including decentralized finance, interoperability, staking, and AI-related infrastructure. Whether investors choose XRP, Flare, Bitcoin, Ethereum, or other projects, the broader theme remains the same. Blockchain technology continues expanding into new areas. Innovation has not stopped simply because prices are down. In many ways, some of the most important technological progress occurs during bear markets because developers can focus on building rather than chasing hype. When the next wave of investor interest eventually arrives, many of these developments may already be in place and ready for adoption. The conversation around utility is becoming increasingly important as the crypto industry matures. In earlier market cycles, speculation often dominated discussions. Investors chased narratives, trends, and excitement. Today, there is growing emphasis on real-world utility. revenue generation, interoperability, compliance, and sustainable ecosystem growth. XRP has long positioned itself as a utility-focused asset, emphasizing payments, settlement efficiency, and financial infrastructure. This focus may become increasingly valuable as the market evolves. Investors are beginning to ask tougher questions. What problems does a blockchain solve? What value does it create? How does it generate activity? Which industries can benefit from its technology? These questions favor projects with clear use cases and established infrastructure. The market may not fully reward utility during every phase of the cycle, but over the long term, practical applications often matter. That's one reason many XRP supporters remain confident despite ongoing volatility. They believe the underlying utility story remains intact. Another development worth watching involves crypto taxation and regulatory reporting requirements. As governments continue integrating digital assets into existing financial frameworks, clearer tax guidance appears increasingly likely. Some investors view regulation negatively, but there are potential benefits as well. Clearer tax rules reduce uncertainty. Businesses gain more confidence when compliance requirements are easier to understand. Institutional participation becomes simpler when legal frameworks are well established. While nobody enjoys paying taxes, mature financial markets require clear rules. The evolution of crypto tax policy represents another sign that digital assets are becoming a recognized part of the financial system. For XRP and the broader market, legitimacy and regulatory certainty could ultimately support wider adoption over time. The path may involve challenges and adjustments, but the direction of travel appears increasingly clear. Despite all these positive developments, the reality is that current market conditions remain difficult. Prices are falling, liquidations have increased, investor sentiment is weak, social media is filled with frustration. This creates an environment where even good news struggles to gain traction. Yet, some of the most successful investors understand that sentiment and fundamentals do not always move together. There are periods when sentiment becomes excessively optimistic. There are also periods when sentiment becomes excessively pessimistic. The current environment feels much closer to pessimism than optimism. That doesn't guarantee an immediate recovery, but it does suggest investors should be careful about allowing emotions to override objective analysis. Markets eventually stabilize, trends eventually change. The challenge is that nobody knows exactly when those transitions will occur. Looking specifically at XRP, the disconnect between price action and underlying developments appears particularly striking. Exchange balances are declining. Regulatory clarity is advancing. Institutional conversations continue expanding. Infrastructure improvements are ongoing. Portfolio managers increasingly recognize the value of diversification across multiple digital assets. Yet the price remains under pressure. This disconnect is exactly why some analysts believe the market is missing what is happening now. Investors often focus on what they can see immediately. Price charts are visible every second of every day. Infrastructure development, regulatory progress, and ecosystem growth are less visible. But those less visible developments frequently create the foundation for future market movements. By the time prices begin reflecting those changes, much of the opportunity may already be gone. The broader lesson extends beyond XRP itself. Successful investing often requires distinguishing between temporary market noise and meaningful long-term trends. Every cycle produces distractions. Every cycle produces fear. Every cycle produces headlines convincing investors that this time is different. Yet innovation continues. Adoption continues. Technology continues advancing. The crypto market today is significantly more developed than it was several years ago. Institutions are more involved. Regulators are more engaged. Infrastructure is more sophisticated. User experiences continue improving. These trends matter even if they don't generate immediate price appreciation. Long-term investors typically focus on these structural developments because they understand that sustainable growth is built on fundamentals rather than hype. As we wrap up today's discussion, remember that markets are often most misleading during periods of extreme emotion. When everyone is euphoric, risks get ignored. When everyone is fearful, opportunities get ignored. Right now, fear appears to be dominating the conversation. But beneath that fear, important developments continue unfolding across XRP, the XRP Ledger, regulatory frameworks, institutional adoption, and blockchain technology as a whole. Whether the market recognizes those developments tomorrow, next month, or next year remains uncertain. What is becoming increasingly clear, however, is that progress continues regardless of short-term price action. That is why many investors believe the market is missing what is happening now with XRP. The headlines may focus on the sell-off, but the real story may be the foundation being built underneath it. If that foundation continues strengthening, Today's fear could eventually look very different in hindsight. As always, thanks for watching XRP Update. Don't forget to like, subscribe, and let us know your thoughts in the comments below.